a C Corp, depending on the reasons for it. Obviously, it'd be best to talk to a lawyer before you consider what type of entity you should and have them help you create an entity. And that's for liability purposes, but also for tax impact to your business. There's pros and cons to each type of them, and I don't pretend to know all the reasons. So again, like Tony said, I'm going to focus on big ticket items, particularly the ones that she polled you guys and got information from you as to what is your biggest concerns. The first one I'm going to focus on is what the heck can I write off? So I know sometimes there's gray areas and you're like, well, is this something I can consider a business expense or not? Yes, there are gray areas. There's some that are very simple, and I'm going to talk about those too. But I think that the Monat business in general that you guys are all fortunate enough to have gotten involved in is not a standard thing that the IRS is used to seeing. It's not a construction company or a dental office that has your standard revenue and your standard expenses. You guys may have some one-off things that seem personal in nature, but could be a business expense. And I'm going to throw out things like samples that you get from Monat that you're giving out. I'm going to throw out an idea that it's gifts you buy for somebody in your team, like a pair of sunglasses because they just had a killer month and you're rewarding them for a great, they're in your network and you're rewarding them for a great month. Those types of things are not standard business expenses. Maybe that your tax accountant and yourself need to be comfortable with a policy that your business decides to take, no matter what size you are. And so some of the things that I would recommend here are talking to your tax accountant on, here's what I think I'm spending money on that relates to business, and that is those complicated things and simple things. How do you want me to classify those things? And whether that's you keeping an Excel file right now because you're just that simple, and that's okay, or you're $1 million earner and above, or a couple $100,000, and you need to consider having some sort of books kept for you. So whether it's QuickBooks or Intact or some sort of program where you're keeping revenue and expenses based on bank activity and such. So talk to your tax accountant, understand what they want you to classify things as so that you can report to them at the end of the year and be able to quickly fill in. Even if you're doing your own tax return with TurboTax, you need to be able to fill in the categories of here's how much I spent on marketing and advertising. Here's how much I spent on travel, etc. Right? So we need to classify every single thing you spend money on. I will say I obviously am a CPA, and I think you need to be extremely ethical in what you're expensing, but that comes with you need to, somebody once said to me, if you're not getting audited, you're not pushing it enough. And I think we need to be safe. Don't get me wrong, but the risk that you run by pushing too far is that the IRS comes back to you and says, hey, we need to audit you. We need to review your receipts and your reason that you're claiming these things for business. So not only, there's two reasons they're doing that. Are they legit expenses or did you make them up, right? And do you have support for them, and should they really be considered business expense? So after they do that audit of you, and obviously not all of us will get audited, but you want to prepare for if you did, they may say, hey, we're not considering this $20,000 to be business expenses anymore. Unfortunately, you owe us tax on what those expenses you claimed were, right? So that's the risk we're running if we push the limit. But if you don't, then you're also paying, more in tax than potentially you should be. So only on the gray area would be the pushing the limits. We need to be safe about it, and we need to be comfortable with it, and our tax accountant has to be in agreement with it. You're wondering what the heck are these things that I think you should write off or claim as business expenses. So the first one's simple: office supplies, obviously your paper, your pens, etc. I know a lot of us nowadays are buying a lot of that stuff on Amazon. Keep a separate credit card or something that's tracking when you're spending business office supplies versus personal, so that you can keep it simple and separated. Other things are computer, phones, internet, postage, office expenses like utilities and rent. You may even be able to claim, if you have a office in your house, a portion of your office or your house as an office. Things like car costs, gas, parking, repairs, car washes to keep a business car clean. And remember, this has to be the car you're using for majority of business. That's one thing that you may, decipher with your tax accountant, should you be doing the method of this car is an asset of the business, or should you be treating it as it's a personal asset that I'm using 50% for business? There's different ways you can treat that. You have travel related to business, meals related to business. Obviously, keep in mind only 50% of meals are deductible. The other one that's a fine line for you guys right now is entertainment. So you guys are doing a lot of partner meetings. You need to have a conversation with your tax accountant to figure out what their threshold for a partner meeting is, because if it's including meals and entertainment, it could be considered somewhat of those, but it's an advertising type event too. And so it may look different for everybody depending on what type of meetings you're having. If you were to hold a Super Sunday and you rented out an office space, to me, that would definitely be, you're doing a business event there. So you need to be on the same page with your tax accountant for how that's getting coded or classified. You have marketing and advertising. You do a Facebook ad, that's a business expense. Promotional items and samples. So here's like these last two I'm going to talk about are kind of another gray area. Samples I already mentioned. From you buy Monat products, you're giving them out to potential customers and or partners. And those are business purchases that you're doing. They're not your personal products. They're samples that you're giving out. So those to me are a business expense. Make sure you're on the same page with your tax accountant. Promotional items is another one that I know is impacting you guys. Those a purse you reward someone with, or sunglasses. You need to decide what that classification is going to be called for your taxes. But in my case, you could call it promotion or marketing and advertising, or there's various different ways you could go about it, but you definitely don't want to call it something that's extremely obvious as to it's a gray area, but you need to be comfortable as well that we're not doing anything that's wrong. We're just simply trying to capture real, true business expenses as what they truly are. And the last one I mentioned, but it really depends on what type of entity you are and the policy you set up with your tax accountant, is the medical reimbursement. So if there's things, if your company is able to help cover some of those things for you, you could have a medical reimbursement expense account. One of the questions that came up that relates to this entire subject of what you can write off as expenses is, how much should I be spending on things? So on all these things I've just touched on, how much should I be spending? And unfortunately, I hate to say this, I wish I could give you a better answer, but it really depends on where you are in your business. If you're in a startup phase and you're willing to be sacrificing a little bit, obviously you try not to operate at a loss, right? So don't spend more on this business than you're receiving from Monat. But at the beginning, that may be a reality, or it may be close. So I can't say there's a set number you should be spending. You should be considering there's different variables that are going to go into this, but your overall, you should have a budget in mind of, I'm aiming at the end of this year to have $10,000 out of this business, or $50,000 out of this business. So therefore, if I can make X, and you've got to do those numbers with your Monat commissions in mind, then I can only spend X. And then you should put yourself on a monthly budget that says, if I'm spending more than that monthly amount, I'm not going to be able to get where I want to get. So I know that's kind of common sense, but I just wanted to say it's not a science. Another piece of the polling that came out is, how the heck can I track all this business expense stuff in the easiest manner? I even personally use tools on my phone or on my computer that allow me to track my expenses and classify them. So I would highly recommend some best practices of keeping a log and tracking receipts. So what do I mean by that? The IRS is going to require, if they came to audit you, that you are able to provide receipts for charges, purchases on a card, whatnot, over 75 bucks. That is a high threshold. So if you only spend 50 on Amazon, you don't technically have to have a receipt for that. But at this point, we probably can easily pull an order history on Amazon. Hold on to those receipts. Obviously, you can go with the shoebox method. I don't love it. The way that I was referring to is that I have an app on my phone. It's called Expensify. We use it for a lot of clients that are interested in tracking their receipts in an easy manner, and their expenses, they want to code them that way. They don't have a bookkeeper, like they're keeping track of their own expenses. So the app is called Expensify, Expensify. And you can use it actually for free on your phone from a personal perspective. If you have a company and you have multiple cards you want to connect, there is a small fee associated with that every month, but I would say it's totally worth it. One thing to note, when you're taking a receipt, the IRS also would love to know who were you with for that expense and why is it a business expense. Obviously, if it's office supplies, you can't say who you were with, but if you were at a meal, you could indicate I was at a partner meeting with so-and-so, and therefore I was, we were working on their business plan, whatever that was that's why it's a business expense. There is going to come a point, so I've talked about Expensify, but there will come a point where you may want to have a full accounting system like a QuickBooks or an Intact or something that would track all of your financials, all of your expenses, all of your revenue. So it's not simply just for connecting a credit card to, because Expensify that's what I'm referring to. Your expenses on a credit card or a debit card can be connected to Expensify, not your bank account. If you want to get to the point where you're tracking all your bank account activity and your credit card or debit card, then you would want a real accounting system like a QuickBooks or an Intact, and maybe even a bookkeeper, which we can talk about. The log part, so I mentioned that you may need to say who you were with at a meeting. One of the things that I've talked to Jay and Tony about, and all my clients, is keeping a log that says, I had Super Sunday on this day, therefore I drove to that meeting. Like, there's something to support why you had a business drive, why you had meals at that meeting, why you rented an office space, something to support the business activities that you're doing. Since you guys have a calendar most likely with meetings on it, that's pretty much a log already. You can add some notes to it. And the last piece I'm going to point out here on this topic is that the easiest way for you to do any of this tracking of expenses and even revenue is to have a dedicated bank account just for your Monat business and a dedicated credit card or debit card that you're using. And you obviously have to be smart about it. Use the personal card when it's personal, use the business card when it's business. That way you can literally pull that bank statement and put it in Excel and code it for your tax accountant so that he can go ahead and have totals and whatnot to produce your tax return. I know I'm going really fast. I'm trying to get done so that I can open up for Q&A. One of the other polling items, big ticket items, is quarterly estimated taxes and how much should you be putting away each month to save for taxes. Obviously, like Tony started to mention, the good old government doesn't just want, you got to make money, but the government wants it too. And that doesn't just mean at the end of the year, unfortunately. So if you've ever had a career where you've worked in an office where you're on payroll of a company, they're withholding taxes for you all year long and paying them to the government on your behalf. And now you guys are in a self-employed state where whether you have an LLC that's receiving money or you're self-employed as an individual, you owe estimated taxes to the government every quarter. And I do it too, and I hate it because your money comes in a big lump sum from Monat, but you owe 1/3 of that back to Sam, and you don't want to wait till year end and have spent all of it, right? So the question becomes, how much should you be putting away every month? You're almost at the end of the year, so it's kind of irrelevant now. You could kind of say, if you needed to and you're getting worried that you haven't saved enough, you could take your net income. So if you say, here's all the money I've made revenue-wise, here's the expenses, so here's the net. Take that number and save about 25 to 30% to be safe. You may even have a 35% tax bracket depending on your whole family's picture. You could start by doing that for 2019. Make sure you've got it saved. For 2020, so what I just want to point out is your quarterly estimated taxes that you owe are based off of a calculation that your tax accountant or your TurboTax software would do. And it's you owe 100 to 110% of your prior year tax return. So basically it's going to base it off of how much for 2019 do we owe, and say you owe that much or more next year because they're planning on you making more money. So then they're going to divide that by 4. If they think you owe 50,000, they're going to divide it by 4 and you owe that amount every quarter. 50,000 is way too much. Let's say you owe 10. You divide that by 4, you pay 1/4 of it every quarter. So therefore, what I would recommend is that you divide that in thirds and save 1/3 of your quarterly payment every single month out of the bucket of money that's left each month. That way you'll be good at year end. A piece of this of how much should I put away, I always end up getting the question on the other side is how much should I pay myself? And I think to answer it shortly, it really is going to depend on what type of entity you are again. So if you're a C Corp, you may want to leave more money in the business because C Corps are taxed differently. And I don't want to get into the nitty gritty, but my point is you need to consider your budget, what your goal is for that year, what type of entity you are, and work with someone like myself or a tax accountant to decide how much should you pay yourself. Just throwing it out there, if you're an S Corp, you have to be paid a fair salary. So a lot of times that's not the best entity type for you unless you know you're going to be able to do that. I think that's kind of the gist. Obviously, this entity stuff does impact it, like I said at the beginning. So that was one of the notes I just wanted to make clear. There is going to come a point where your business may become more complex and you don't feel comfortable tracking all this stuff in Excel on your own or anything. And so that becomes the point where you may want to hire a bookkeeper, an accountant, and that's what ultimately we're doing for Tony and Jay. If there's enough complexity there becomes a value in having someone because we could actually probably save you money by just being there as a guide and giving you financial analysis on a quarterly basis and working with your tax accountant. So I am happy to discuss that, but I do want to more so open up for questions before I run out of time, Tony. One of the things I'd love to hear in your questions is what are you most concerned about from an accounting standpoint, and what are your biggest pain points related to taxes in the past or as you're worried about coming up?
So Brittany, before I do that, and I didn't want to make you rush for time. I just want to be timely for everybody involved. Yeah. I want to talk about something that we had a discussion about because this was a process of evolution for us. And, I get a lot of people that ask us questions on this, but I want to talk about the things that we do or we have to do in our business for our public persona. And even though it might be a brand new market partner or somebody that's, building a team, or maybe they're more of an established leader, I think there's a question of gray area. And I'm going to tell you what we do. We've gotten it approved. I've been doing this for the last 10 years. I've been in network marketing because it is all a part of business and it's a business expense. So we put all of this under advertising because we were talking about meals and entertainment. If we're out with our team, that it really falls for us under advertising.
Yeah, we have something called partner meeting expense.
Yes. Okay. But also too, when we were talking about this, because for our clothes that we buy for our appearance, from hair to nails to, even our makeup and stuff like that, for us to be on stage, because that's part of who we are, or when we're doing Meet Monates and it's being recorded on Facebook Lives or on YouTube. We live on the edge of that because we do so much of that. I know that we're at the higher end of that echelon. So I know that we've had discussions about this, but I really encourage our market partners that if they're doing this, it is part of, if we're spending money on our business, this is the business. Well, not right here tonight, you guys. Trust me. It's been a long 10 days and I just got home. But the thing about it is if this is I never had my nails done before Monat. I've never, gone and, bought, certain outfits because, I know that we're going to be in front of people, and that's part of who we are. And it goes back to, and I just want to backtrack on this. And this is when I knew that we could push the envelope a little. There was a landslide case I don't remember which court it ended up in. I haven't looked back at it in a few years, but there was a landslide case because, and forgive me of my analogy that I'm using here, but it relates to the same thing. There was a stripper. She got a boob job, and the IRS tried to come after her because they did not deem it for business. She proved that when she had this done, that her income revenue went up. So it was actually decided for her in the case that it was actually a business expense. Okay. Now, I'm not saying being dishonest. We're not dishonest at all. But every single event that I do, if I go out to dinner and I talk to the waitress, or it's with a market partner or whatever, is that we're classifying under advertisement because we get a bigger write-off. Now, I know that's pushing the envelope, but I want to give people options. So what is your suggestion on that?
That's where I think it's one of the reasons that I majorly said you and Tony, we've done this with our team and the tax team. What are we all going to, be able to get comfortable with? And that's why, I focused on make sure you set a policy that not only are you comfortable with, but your tax accountant comfortable with. And it does, to your point, it's marketing or advertising that needs to be the expense. You can't call that personal care. The IRS is going to go, what do you mean? Personal care is not a business expense, right? So the point, that's why I want to make sure people are working out what are we calling our expenses when we're creating our financial statement to back our story of our business.
Awesome. Thank you so much. I really appreciate that because a huge part of our expenditures, are that. And as you grow a team, and I know, some people on this call, some people are just starting, some people have, some really good foundations for businesses. So there's always, it's going to change as you grow. I really feel that in your business. But Alma just asked, do you have a form to track mileage, or can you share a form that we can get? Is that on Intact?
So mileage is one that is something. So mileage is going to be something that you track as a person for your business. It's not something that's going to be in the accounting system per se, I guess. But there's two things. I have an Excel file that I even use personally that includes the different things that you would need. And I could share that with Tony, and you can share it out if you want. Otherwise, there is an app. I need to figure out the name of it. Again, I can share it with Tony, and she can share it out. There's an app that I have used myself. The reason I decided to go away from the app is because, and I'll still share it because some of you may say, well, all of my driving is business. But the reason I went away from it is because it was tracking all of my driving, and then I had to code it if it was personal or business, and that seemed harder to me than just creeping a spreadsheet where I added here's where I drove and here's how many miles it was to this meeting. Okay, so I can share that. It looks like somebody else asked about a car lease. So yes, a car lease can be a business expense if the car is a business car.
Okay, but what's better, owning it or leasing it?
Well, that is probably more of not even a tax or accounting question, but more of what is the total cost of it. My husband would go ahead and do some long spreadsheet that would tell you, your lease payment is $300. And actually we did it for my own car. And it depends on the car you're buying and the timing and the financing. But if you can buy it, you may get back equity of $17,000 or $20,000 at the end, and it would end up costing you less than the car lease. So it depends on your situation and the car.
Awesome. You guys, do you have any other questions for Brittany?
Monat events, I save receipts for food and drinks. Yes, that's correct. You should. There was one at the top. What's the best app for tracking expenses? I shared that one. I would highly recommend Expensify again. Canada MPS.
So Karen's asking about Canadian MPs. So here's what I know, and I don't know if you know about you know, a lot of about Canada, Brittany? I'm going to assume no. Okay. So Canada has very similar write-offs that we have. The one thing that you have to really examine from when I've talked to a couple of Canadian accountants and some of the higher level leaders like the Murphys and the Barretts and the Mosiers, is that your expenses are going to look a little bit different as far as advertising and marketing because they have stricter rules. My best thing is, you guys, here's the thing, bar none, you have to have 3 professionals in your back pocket. You have to have an accountant and a bookkeeper. As you grow a business, you don't need it right now. Like Brittany said, you can use TurboTax. We use that for many, many years. And even into our first year of Monat. What I found though, is that we weren't smart and we started making more than $1,000 a month. And I did not outsource an accountant and a bookkeeper and a CPA. That's the first person that you need to outsource. If you're making more than $20,000 a year, you need to talk to an attorney and see which entity you should become, because that's going to continue to increase. As a sole proprietorship, it's, and again, Brittany, you can correct me, but I think that I've fairly educated myself throughout the years, because I love paying taxes. When my quarterly taxes are due, I bless God, said, yes, I can pay this amount. But the thing about it is we've got to pay something. It keeps us humble, and it keeps us in good check, and it does contribute to other jobs. So, well, on a certain level, but
you also have to say the only reason you're able to pay those taxes is because you have this great business that's going well for you.
Yes, exactly. So Alma said, I just started in December, so my start expenses this month will be greater than the income this month. Can the IRS expect that to be correct? Like,
yeah, and you should definitely do that. A lot of, so, and this is kind of a fine line. There's a lot of business owners that we help that actually are hoping to have a loss. So they spend more than their income because they want to help out their family's taxes overall. Like, they don't care that they have a loss. They know they've made the money they needed to make, they've paid themselves, whatever. So long story short is the IRS is okay with losses, and do definitely report all your expenses. Don't reduce them just because you want, to make a profit or anything. Like, show your true expenses.
Well, so here's the thing is that in any business, 90% of businesses do not make a profit in their first 5 years. So that's expected. So, the one thing is just be cognizant and be honest about it. Oh, so Karen says, what about a salary for an assistant? Well, that's a business expense.
That's definitely a business expense. If there becomes a point where you should have payroll, that may be something you do need to consider. I'm very glad you brought it up, because if you have an assistant that's working only for you, even if part-time, but is specifically dedicated to just you, you do need to consider whether you should have payroll, not just have them as a consultant. But if that's just like a part-time thing, they help you, there are ways you can get around it. You could pay them as a consultant or a part-time 1099, but you do need to make sure you issue them a 1099. And in order to issue someone a 1099, you need to collect from them a W-9. But salary for an assistant is definitely a business expense. Or any payroll, if you have somebody else that's helping you put together your speeches, like, that's someone that should be an expense.
Yeah. So Alicia asked, do you recommend any books for network marketers? She says she has the book from Courtney Epps. I don't know if you know her.
I don't, but I don't have any books off the top of my head. At this point, no.
Okay.
We could definitely come up with some, yes.
Okay, and she says she has a website. She put it in the comments, Brittany. So here, let me hold on 1 second. Oh, she said thing. Okay, so here's the thing. I know that you've given us a lot of great advice tonight. And the one thing is that I can compile a list of questions after that if people have afterthoughts. But if they really, so here's a good question Karen asked. At what monthly commission would you consider hiring an accountant?
So I'm trying to, let me do some math here. I feel like annually Annually, you probably need to be, this is a tough one because it could differ depending on if there's some reason that you're complex, but I would sort of lean towards you need to be probably over 20,000 a month in order to make that make sense, because you can't really probably afford what you need, or you're not complex enough and there's not enough moving parts and you don't need full financials.
So I'm sorry, you said 20,000 a month?
Yeah.
Okay. So let's just say that they have a lot of other moving parts. Let's say that they have a job, then they have Monat, then they have, maybe a significant other's income or whatever. What if that all compiled into that?
That's a really good point. And there could be people that are like, okay, I make $5,000 a month and I just need you to handle this. And I don't, that's okay. If you have let's say your husband has a business and you're running this and you just want all of that consolidated to look at your overall wealth as a family, or you have a job and you have this and you want help with it, that absolutely would be a situation where you may want a bookkeeper, even if it's somebody who only does it, quarterly for you at the beginning and then becomes monthly. But if you start to have thousands of transactions going through your bank, through your credit cards, your debit cards, you need to consider getting some help. Okay,
so let me ask you one other question. So for these people that are just starting out, or they're making $1,000, $2,000, even maybe $5,000 a month. So would you recommend Expensify and then go through TurboTax?
So if you are $5,000 a month, and so $60,000 a year, or even $1,000 a month, and you're feeling like, I would like to have a good handle on total revenue coming in and total expenses, the easiest thing for you to do, if it's really small and you're not ready to blow yourself into an accounting software, I would do it in Excel and keep track of all of your incoming and your outgoing, and then have a net number, right? And do that for every month and keep adding to it every single month. But ideally, you hit a point, and I think that point's probably $5,000 a month. You want to put yourself on QuickBooks to keep track yourself at least first. And then maybe you say, hey, I don't really want to keep track of this anymore. I need a part-time bookkeeper once in a while to do this for me. The reason I say QuickBooks for someone who's going to try to do it themselves, and Tony, I know we're moving past QuickBooks right now, but QuickBooks works for somebody who just wants to connect their bank, connect their credit card, and they want to do it themselves, because it basically does a default to say that expense is advertising last time, so it's advertising this time. And if you're simple enough, it works. That's what I'll leave it at that. So QuickBooks would be my starting point for you if you are feeling like you want to have a profit and loss statement that says total revenue, total expense.
So here's my other thing, okay? And it's going to apply to a lot of people that are going to watch, the replay of this, is that they're not mindful of their money. Okay. And that is one of the challenges that I have all the time, is their money mindset. And most people, they're not budgeting and they're not keeping track. Okay. So can you give us, and I'm going to put you on the spot here, Britt, can you give us the 3 non-negotiables that they have to do in order to actually get to the point where they have a successful business within, 90 to 120 days? What are the 3 non-negotiables?
To me, you just gave me number 1, which is budget, even for my personal life. Andy, my husband, and I have a budget for personal, and I think that's important. If you're fortunate enough to be at a point where you're doing okay, and you in a business or personal, and maybe the budget, I don't need to track it that closely, right? But for most of us, it does matter. Every dollar could help make more. So I think a budget is number 1. Number 2 would be having your finger on the pulse. So not only do you want to track to your budget, but I would say I need to know where my actual is ending up. And so that's why I think having a financial statement. So my husband does our own financial statement, not in a system, in Excel. We're still simple. But I think it's important to put together, here's my total incoming funds and here's my total outgoing. Am I spending more than I'm making? So that's outside of a budget, right? You obviously want to keep yourself honest to the budget, but now I want to say data is king, right? If I know where I'm at, then I know how I'm going to get somewhere going forward. And then my third, trying to think, I do own a business, so I'm trying to think what my third is. Those are like my two lifelines.
Well, they actually had four important points in it. So
I think maybe, you know what, my third is have good business relationships and utilize them because like she's, you know, Tony, you led on to a lawyer, a tax person, an accountant. Those people, you can pick up the phone and ask them something that may not even relate to what you use them for typically, but they're going to be in your corner. So have good relationships.
So the other thing is too, is a banker. So, you know, usually we do all that stuff online, but you know, I've been at my branch here locally for 5 years. I've gotten to know one of the guys really well. I walk in and he knows if I'm walking in, it's a big problem or there's an issue, because I only walk in if there's an issue. He takes care of me right away. And I love that about the personal service. So one more question.
Lou has a good question.
Yeah. I have multiple businesses too, which you know, so this applies.
Yes, it's 100%. So if they're related businesses like a hair salon and Monat, you probably could get away with keeping them combined. However, I steer towards, so there's two reasons you would separate them: liability purposes, and secondly would be you would like to know how one business is doing versus the other separated from each other. Because maybe your Monat business starts killing it and you're like, forget this hair salon, right? But so my point, I guess, is it depends on where you are. If your Monat business is taking off, I would keep that as a separate entity for multiple reasons and have your hair salon and report out on them separately. Your accounting system can keep books for both, basically.
Awesome. So Brittany, I think that we have answered everybody's questions. We've kept you on the phone long enough, or on the Zoom. Really appreciate you sharing with us tonight. It was a wealth of information.
I hope I didn't bore everybody. I know it's boring.
No, I wasn't bored at all. And I know all this stuff. You really have a great repertoire and you love what you do. And that's what I love about this. Yes. So thank you so much. You guys, we will have the recording up as soon as I get it sent to me, and then you can share it with everybody, and I will go post it in Team Triumph. So again, thank you for your time tonight, my friend. And you guys, thank you so much. If I do not talk to you again, have a beautiful, beautiful holiday, and love you all. Talk to you soon. Take care. Bye-bye. Oh, Brittany. Oh, crap. She went off. I'll find out where if you guys want to ask her questions, she said she'd be more than happy to answer anything private, and I will get that to you guys. All right. All right. Love you guys. Bye-bye.